Who are you when you sit down to trade? A gambler chasing excitement or a professional risk manager protecting capital? Your identity decides every click. It shapes if you cut a loss, follow your checklist, or push the trade out of fear or greed. The market doesn't care about your setup. It reacts to your behavior. Weak identity brings chaos. Strong identity brings consistency. Welcome to the Trading Psychology Course. In this chapter, we're focusing on trader identity, casino player or risk manager. You'll see why some traders approach the market like gamblers, chasing the rush, while others act like professionals, managing risk with discipline. We'll break down how your identity shapes every trading decision you make, from position size to emotional control. By the end of this lesson, you'll know how to recognize your current identity and begin shifting toward the mindset of a true risk manager. Let's start with something most traders never think about: identity. Most traders focus only on strategies. They believe if they learn one more indicator or one more pattern, they'll finally become consistent. But here's the truth. Strategy is only the surface. The real driver is invisible. It's the identity you bring to the screen. Two people can learn the exact same setup, read the same books, even trade the same chart. And still, one will grow his account while the other slowly blows up. Why? Because it's not the setup that makes the difference. It's who you are when you execute it. Identity is that inner story you carry into the market. It's the voice inside your head when things get uncertain. For some traders, it says, I have to be in a trade right now. For others, it says, my job is to manage risk first. And that voice decides everything. Whether you respect your stop or move it just this once. Whether you follow your checklist or throw it out the window. Mark Douglas, in Trading in the Zone, explains it perfectly. Consistency doesn't come from predicting the market. It comes from thinking in probabilities, from knowing that one trade doesn't define you. And you can only think that way if your identity is built around being a risk manager, not a gambler. Some traders enter the market seeking excitement without realizing how much that mindset sabotages their results. This contrast in identity between those who seek consistency and those who crave thrills is exactly what Dr. Brett Steenbarger highlights in the following video.
I would say two self-destructive behaviors come to mind immediately. The first I would call trading addiction. People can be addicted to trading just like they can be addicted to gambling, and for much of the same reason. Not everyone trades to make money. Some people are trading for thrills and excitement, and those people do get in their own way. And much of the money that's made in trading is by being patient and waiting for your edge, waiting for your opportunity. If you have the need for thrills, you won't have that patience. You won't wait for your opportunity, and you get in your own way. The other self-destructive behavior I would call impulsivity. When people make impulsive decisions because of frustration. They lose some money, the market's not moving very much, they become frustrated, and out of that frustration, they feel a need to trade. In fact, traders call it over-trading. They make those impulsive decisions where they don't really have an edge in the trade, and they end up losing money as a result. My rule of thumb is if you're thinking about yourself or you're thinking about your profit and loss, you're in the wrong place. You should be market-focused, not self-focused. But if you don't have a relatively quiet mind, you can't access those intuitions. When traders are frustrated, they're thinking about their profit and loss statement. They're not really focused on markets. And as a result, their impulsive decisions aren't based on instinct. They're based on emotions.
This clip reinforces a crucial truth. Sustainable trading comes from discipline and identity, not excitement. Now, let's talk about the casino player mindset. This trader comes to the market for excitement. Flat exposure feels boring. They want to be in a trade. They want action. They want that rush. For them, trading is not about probabilities. It's about stimulation. And here's the science behind it. Studies show that the brain releases dopamine, Not only when we win, but also when we're about to win, when the outcome is uncertain. That's the exact chemistry casinos exploit with slot machines. And the same thing happens in markets. The casino player is hooked, not on profits, but on the emotional high of almost winning. You can see it in their behavior. They increase size right after a win because they feel invincible. They jump back in after a loss, desperate to make it back. They trade headlines, rumors, anything that promises a quick move. And if the trade goes against them, they start moving the stop further and further, hoping the market will turn. Emotionally, it's the same cycle every time. A spike of excitement when they enter, anxiety as the trade moves, relief or euphoria when it closes, and almost immediately the craving for the next hit. The market becomes a slot machine with candles instead of reels. And here's the problem. The casino player escalates risk exactly when variance is highest. Big after wins, reckless after losses. Sooner or later, one trade wipes out weeks of effort. The identity of a gambler always leads back to the same place, giving it all back. Some traders chase adrenaline. Others focus on survival. In the next clip, Larry Williams, who has worked with over 100,000 traders worldwide, explains what separates those who make it from those who don't.
I worked with probably 100,000 traders and investors literally throughout the world. My books are in every major language of the world. And I really looked and worked with these traders to see what separates, what makes a really successful winning trader. And you know what I think I've seen in all of these people? They're absolute survivors. Some are not what you would call particularly intelligent. They're not bright. They're not gifted mathematicians. They may have a background like mine in journalism and writing, or they might be a car mechanic. Or they come from all walks of life, but they just have that strong desire to survive. And I don't know quite where that comes from. I don't know quite how to teach that to you or how you can become that, but it's something I think you need to have as a model. It's all about survival, not losing your money, staying in the game, not betting big, so of course you can stay in the game, but you increase your ability to survive and you're going to become a much better trader or investor.
In the end, it's not brilliance that keeps you in the game. It's survival instinct, the opposite of the gambler's mindset. Let's continue. Now, let's look at the opposite mindset, the risk manager. This trader treats capital like inventory. Their first job is not to predict the next tick, but to control risk and keep the business alive. They don't need constant action. They only take trades that fit their plan. Before they enter, they already know the answer to two questions. How much am I willing to risk? And where is this trade invalid? Once those answers are clear, emotions lose their power. The stop is placed, the size is fixed, and the outcome is just part of the process. Think of other professions that deal with risk. A pilot doesn't take off without a checklist. A surgeon doesn't cut without sterile instruments. An engineer doesn't build a bridge guessing the weight it might hold. In each case, one small mistake could cost everything. That's why they follow protocols. That's why they train to manage risk first. And a professional trader is no different. The risk manager doesn't think in terms of one trade. They think in series. They know that over 20 or 50 trades, their edge will play out as long as they stay consistent. And that's the key word, consistent. Not perfect, not exciting, just steady. And this calm shows up in their emotions. They're not chasing the thrill. They're not panicking when a candle spikes. They accept the cost of doing business, one trade at a time. And because of that, they avoid the giant loss that destroys gamblers. Over the long run, that difference changes everything. This mindset of simplicity and consistency is exactly what Al Brooks uses to navigate dozens of trades each day, with a structured, rules-based process.
To me, I'm a day trader, and I consider about 40 trades a day. On the E-mini, there are 81 5-minute bars every day, and on an average day, there are about 40 potential setups. So I'm thinking constantly, and for me to be able to process whether or not I should take a trade and then place the trade and do everything correctly, I have to have a bunch of rules that keep things simple. And one is limiting my choices to two things. So risk on, risk off, bull trend, bear trend, trading range, high probability, low probability. I categorize everything that I see into a binary decision. And once I make a decision, for example, if it's trend versus trading range, if it's a trend, I'll look to swing more of my position. If it's a trading range, I'll look to buy low, sell high, and scalp. So it determines how I want to trade. If the trend is up, I want to buy. If the trend is down, I want to sell.
Clear rules, binary decisions, consistent execution. That's what risk management looks like in practice. Let's keep going. Most traders are not 100% gambler or 100% professional. The truth is, you're usually a mix of both. Some days you trade like a risk manager. Other days you slip back into the casino player. The goal isn't perfection. The goal is to shift your center of gravity toward the professional side. And that shift starts with clarity. You need to know your role. If you tell yourself, I'm here to make money today, you'll feel pressure to force trades. But if you tell yourself, I'm a risk manager, my job is defense first, everything changes. The way you size your positions, the way you set stops, even the way you handle losses, all of it follows that role. Second, you need the right environment. A clean chart with your stop and risk marked is a trader's cockpit. A checklist on the screen is a reminder of what matters. And removing distractions, like news feeds that trigger FOMO, is part of protecting that identity. Finally, you need language and rules that support who you want to be. Replace I hope this bounces with if my plan is valid, the setup will trigger. Replace I need to win it back today with my max loss is 2R. If I hit it, I stop. These small phrases keep you aligned with the identity of a risk manager. Identity isn't a trick. It's the foundation. And every time you choose the language, the environment, and the role of a professional, you weaken the gambler inside you. Step by step, the casino player fades, and the risk manager takes control. All right, let's wrap this up with a simple but powerful exercise. I want you to take just 15 minutes today and write what I call your trader identity declaration. Keep it short, keep it bold. Start with one line that defines who you are in the market. Something like, I am a professional risk manager. My job is to protect capital and execute my edge with consistency. Then underneath that, write a few clear rules that flow from that identity. For example, you might write something like, I risk the same fixed amount on every trade. Or maybe, I never widen a stop once I'm in. Another one could be, I stop trading if I hit my daily loss limit. And of course, I only take setups that pass my checklist. Print it out or stick it on your screen where you can see it. And here's the key. Read it before your first trade and again after your last trade. Do that long enough and it won't just be a reminder anymore. It will become who you are. Because at the end of the day, your strategy is just the vehicle. Your identity is the driver. If you show up as a gambler, even the best system won't save you. But if you show up as a risk manager, even a simple plan can take you a long way. And in the next lesson, we're going to build on this by talking about risk, reward, and how to think in probabilities. The real mindset shift that separates pros from amateurs. Please also remember that you're not alone on this journey. All the material in this course was developed by the ComLucro channel, built on thousands of hours of trading experience and enriched with knowledge from books, lectures, and videos you can also find here on our channel. I invite you to explore our other courses and learn from the insights of world-class traders and coaches like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, Larry Williams, and many others we study and share here. And in the next module, we'll go even deeper to help you understand trading decisions and how to align your mind so it works for you, not against you. I hope you enjoyed today's video. If you found the content helpful or engaging, please give it a like, as this helps the video reach more traders like you. And don't forget to subscribe to the channel and turn on notifications so you never miss our latest insights on the markets and practical trading strategies. Sharing this video with your friends or on your social networks can make a big difference and helps our community become stronger. Now, if you want to go even deeper and get access to exclusive content, early video releases, and extra tools to support your journey, consider becoming a member of the ComLucro Trader community right here on YouTube. It's a way to support our work and a smart investment in your own development. Thanks for watching, and I'll see you in the next video.